I wanted to talk about a strategy called tax loss harvesting. I want to explain what it means and how to do it. It's something that should apply to precious metals as well, by the way, but it's primarily used when it comes to stocks. The last reason I was expecting there to be somewhat of a sell-off was because I thought a lot of people would not only be capitalizing on some gains, but also capitalizing on some losses. You see, that's where tax loss harvesting comes into play. It's a tax saving strategy which you should 100% talk to your tax person about. This isn't tax or financial advice, but what tax loss harvesting essentially is, it means that you're able to sell something at a loss to offset what you owe on a gain. For example, you own 2 stocks, one of which did very well this year. You're up $1,000 and you sell. Ordinarily, gotta pay taxes on that $1,000 profit. But what if your other stock didn't do so hot this year? Maybe you're down $1,000 on that one. If you sell that stock at a $1,000 loss, it should cancel out what you owe on the other stock's $1,000 gain. Again, talk to your accountant about this, but to my understanding, this tax loss harvesting strategy applies to precious metals as well. The reason for that is because if your precious metals go up, you're expected to pay capital gains tax. If your metals go down, you should, in theory, be able to deduct that if you sell at a loss. Now, obviously, it's always better to pay taxes on a gain than it is to take a deduction on a loss. You shouldn't be excited to sell anything at a loss, but if you made some money this year or any year in the future, and you have a couple of stocks that ended up being duds, it's something to consider to save a little bit of money. Come join the Precious Metals VIP Club. It'll be the first link in the description. You're invited. I'd be happy to have you.